Hello and welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday. So if you are new here, please don't forget to like, subscribe, hit that bell notification button. We've got a load of news to discuss today. We're going to be talking about those Bitcoin ETFs. We're going to be taking a look at whether some more altcoins should be categorized as securities and are going to in the future. We're also going to take a look at the rest of the cryptocurrency news for the last 24 hours, and we'll take a look at the price of Bitcoin, analyze that and see what's really going on there. We did see a nice sharp move yesterday. It was quickly retraced, but Bitcoin's looking pretty volatile right now. Taking a look at the price of Bitcoin here, you can see we are currently sat at 30,433, up 0.8% within the last 24 hours, but still down on the week. And Ethereum again up 0.4% in the last 24 hours to 1,870. So we have seen some volatility in the markets, and that is exactly what I like to see. So we will be discussing that, as I said, and analysing that. Hello to everybody in the chat. Thank you very much for joining us once again. Let's get started now into the cryptocurrency news and see what is going on here. So first of all, let's talk about those spot Bitcoin ETFs. So these are exchange traded funds. They are essentially an asset that are traded on the NASDAQ or traditional financial markets, and they track the price of Bitcoin. So one of these stocks would equal one Bitcoin. The price would be the same. It would be pegged. Now, we've seen BlackRock file for a spot Bitcoin ETF within the last couple of weeks, and following that, we've seen many other institutions filing for spot Bitcoin ETFs, including Fidelity. We are now waiting to see what the SEC have to say and whether they will accept them and allow these companies to launch these ETFs. Now, we have heard from the former SEC chairman, and he has said that these spot Bitcoin ETFs will be hard to resist. So far, the SEC have slightly rejected these. We've had many Bitcoin spot ETF applications before. In fact, we've had 33, I believe, but now we've had BlackRock apply. It feels like it's a whole different board game here. What we've seen is the SEC slightly reject some of the recent applications and say you need to clarify this a little bit more. We need a little bit more detail. And BlackRock and Fidelity both provided the extra detail and refiled for a spot Bitcoin ETF once again. Now we're hearing the former SEC chairman saying he would find it hard to resist to accept these. So let's take a look at this article and see what's really going on here. Before we do, please don't forget to like, subscribe, and hit that bell notification button. We have a lot to unwrap today. So what we are seeing here is Jay Clayton believes it would be difficult for the SEC to resist approving a spot Bitcoin ETF if the institutions applying for them adequately prove that spot Bitcoin ETF markets are as effective and stable as futures markets. I feel like I'm going to sneeze. Hold on. No, it's gone. It's gone. We can carry on. The chance of the SEC approving a spot Bitcoin ETF might be increasing daily. Now, we've heard the former SEC chairman, Jay Clayton, stated that it might be hard for the regulator to resist. So Mr. Clayton has actually said, when the SEC approved the futures-based ETF, they said, let us look at the futures market. We see the surveillance. We see the protections in that market for the end investor that are sufficient. We don't see them in the spot markets. I think what the institutions are now arguing is that those distinctions have gone away, and now the spot product is actually less drag and more efficient for the investor. If there is not much delta in regulation, that much delta in efficiency, then the spot should be approved. So he has said that it's hard to resist approving a spot Bitcoin ETF, and he sees many benefits to this. We have had BlackRock, Fidelity, and others refile their spot Bitcoin ETF applications with the SEC. And we've seen many of them partnering up with Coinbase to provide Bitcoin's data to provide the price for these ETFs. Really interesting news unraveling here as time goes on. It's looking more and more positive. It is expected that we are going to hear about these, the end decision from the SEC in around March next year, which positions us perfectly for the next halving. The next Bitcoin halving is expected to be in April 2024. So if we see that following if we see the Bitcoin ETFs being accepted just before that, it would position us perfectly for a nice big bull market. That's what I'm expecting, obviously. We need to see what's happening here. Nothing is financial advice, but things are looking up now. I mean, last year, November, December last year, things were being saying things were very negative in the market. Cryptocurrency Twitter was not a nice place to be. Everybody was arguing, everyone having internal arguments rather than just looking at the bigger picture and realizing the markets aren't going to be down forever. Let's continue with today's news though. Let's check in with the chat. Jason Smith said, are you able to post links to the CSE streams on Threads? Now, Threads, interesting topic. Side note here, let me know in the chat if you have been using Threads and what you think of it and if you prefer it to Twitter. Now, I've given it a go. It's an interesting app. The user interface is pretty nice. It all looks pretty sleek, pretty user-friendly. There are some negative things to it. Obviously, it's the first version. They got like 10 million users within 7 hours, which is absolutely crazy. We did a post on the Crypto Saving Expert Instagram, and it compared how long it took different platforms to reach 1 million users. It took Threads 1 hour to get 1 million users. It took Netflix 3.5 years. Now, obviously, Threads is slightly integrated into Instagram, so it's got that nice transition, and it's really easy for users to get involved in, but that is a massive, massive number there. Some of the problems that I've seen with Threads so far is there's no online website that you can use to log in like every other social media platform, and the other thing is you can only be logged into one Threads account on each device. So on my device, I'm logged into mine, so I can't then log into Crypto Saving Experts, which is really, really frustrating. Maybe that's something they'll bring in newer versions, but right now, I think I'm personally sticking to Twitter. Let me know what you think in the chat. It's an interesting one. It's a nice new application. I think a lot of people jumped onto it expecting to be able to get a nice reach because it's a new application, usually on new social media platforms. You can get nice reach if you're one of the first creators on there, but with the amount of creators jumping on it straight away, we haven't really seen that. So let's continue anyway, back to the cryptocurrency news and see what else is going on here. 25 of the top 100 cryptocurrencies could be commodities. Now, what we are talking about here is the classification of digital currencies. What we have is the problem with the Howey test. Sorry, I've just knocked my camera there. So with the Howey test, this is a test from 1946, and it determines whether an asset is a security or a commodity. When we put the Howey test on digital assets, it doesn't really clearly clarify whether an asset is a security or a commodity, which creates problems for the cryptocurrency industry, because if an asset is a security, it needs to be regulated by the SEC. It would then need to be registered with the SEC, and cryptocurrency projects typically don't do so, which means they could be classified as unregistered securities, and cryptocurrency exchanges that offer those tokens could be classified as a exchange offering unregistered securities. This is a problem for both the project and centralized exchanges offering these tokens. Now, none of these projects want to be classified as a security. None of these projects believe they are classified as a security, but the SEC have recently started pointing the finger and said, no, you are a security. And the cryptocurrency industry are clapping back, and we're saying, okay, if you're calling that a security, explain why. Be transparent with your framework. We can then learn from that as a cryptocurrency industry and adapt to that. If we understand the regulation, it's transparent and it's clear, we can work with that. But what you're doing right now, not creating any transparency and just pointing the finger, is not the way we can move forwards. So we're all in this sort of guessing game right now. They're regulating by enforcement, and that's making it really, really difficult. Now, if we take a look at what is going on here in this article, we've got FanX analysts have concluded that 25 of the top 100 digital assets by market cap could classify as commodities, which is a good thing, using the recently proposed legislation on a digital asset framework for the SEC and the CFTC. So as I said, the SEC regulates securities, the CFTC regulates commodities. Right now, without that clarity on the framework, these two regulators are overlapping in the US. So that's causing a massive problem in itself here. So we are looking to get this digital asset framework sorted so that we can understand this a little bit more and work with it. As the cryptocurrency space, a lot of people outside cryptocurrency think that cryptocurrency users don't want regulation, but I think the majority of the industry do. We just want transparency and clarity on that regulation. We fight against regulation because it's not clear, and we're seeing regulation by enforcement rather than just being transparent with how we should regulate the space. So let's continue with this article here. Decentralization is not binary. The team at VanEck pointed out that determining whether a blockchain network is decentralized enough is more challenging than it seems. And yet, I mean, at the end of the day, decentralization is sort of you can interpret it how you want. You can look at an asset that has a network that has 2 nodes is more decentralized than one, and it just goes on and on and on. It's a subjective term, essentially. So it's not just a, yes, this is decentralized, this is not. We need to look at this with a bit more of an understanding of this. So they have said many open source blockchain projects participants have argued that decentralization is not binary, but a spectrum comprising a handful of fluid factors, including network architecture, team makeup, and tokenomics. But the spectrum claim only applies until one faces a lawsuit. At that point, more specific distinctions are required. So 25 of the top 100 cryptos may be commodities. We've already seen the regulators in the US determine Bitcoin as a commodity, but really, that is it. Not even the SEC chairman, Gary Gensler, is wanting to say outright that Ethereum is a commodity. So we're seeing lots of problems here. Let's take a look at this here. Before we continue, please don't forget to like, subscribe, and hit the bell notification button so you don't miss the latest cryptocurrency news. We do these live streams every single day, and I would really appreciate it if you can help us out in the algorithm. Help us by giving us a like, drop a comment on today's stream, and help us try and get to 100,000 subscribers by the end of the year. I want one of those nice big gold plaques, and I need your help to do it. Let's continue with what's going on in this article here. So you can see, according to analysts, just 25 of the top 100 tokens could potentially be considered sufficiently decentralized to avoid the disclosure requirements of the proposed law. So in the proposed law, if a token is sufficiently decentralized, that means it can be determined as a commodity. But as I've said, it's more confusing than that. So we are going to have to see how this plays out in the future. Nobody really is understanding how this is going to move forwards. The cryptocurrency industry have been protesting for some clarity on this, but it feels like it's still a long way away. I mean, we did see somebody say to the SEC last year, Coinbase said to them, we need more clarity on this. And the SEC said, you've already got clarity. The framework's there. But it doesn't work. The Howey test from 1946 doesn't fit the new industry. And the SEC know that. They need to sort this out and provide some clarity on the sector. Until then, it's going to be a very volatile journey, I think. I mean, we've just seen the SEC filings against Binance and Coinbase list multiple different tokens as securities for the first time, including Cardano, including Solana, and including Matic. And we've seen massive fluctuations in the prices since then, but honestly, the volatility from that seems to have calmed down. I think the cryptocurrency industry moved on from that news very, very quickly. Let's continue on to the next story here, though, and see what else is going on in today's crypto news. Let's see, Hennett said, let's not get it wrong. The man is a former chairman, not the current, so he is not the one to approve it or not. No, he is not, but this is a man that has been in the position before. He knows this inside and out and how this should work. We need to see how this is going to play out. Obviously, Gary Gensler is currently the chairman of the SEC. Hopefully not for much longer, but right now that is the circumstance. So we need to look at this. I personally still believe that a Bitcoin spot ETF is for BlackRock is highly likely, but that is something that we need to wait and see on. There is a chance that it is going to get rejected. I'm not sure the markets would react very positively from that news, so we do need to be aware of that scenario. Let's continue with today's news and see what else is going on here. So the Standard Chartered sees Bitcoin at $120,000 next year. Nice big positive price target from Standard Chartered here. So the bank's analysts believe the current Bitcoin rally could encourage miners to hoard more of its supply and sell less, driving the asset's price to new levels. So what we have for Bitcoin, very interesting this. So we have Bitcoin miners, they support the network, they mine and they earn Bitcoin for doing so, but they have to spend a huge amount on their hardware, a huge amount on their electricity, and therefore they actually cause a lot of selling pressure for the industry because they have all of this outgoing expenses and they only really have that 6.25 Bitcoin every time they mine a new block as income. So when that Bitcoin comes in, they need to sell that in order to cover their losses. So we see this selling pressure from those that are actually supporting the network and helping build the blockchain. So when we see them estimating higher prices, it is definitely a positive thing. I mean, for the Bitcoin miners, it's a really difficult time right now because if they analyze the price too much, by predicting the future price of the asset, they're adding more risk into their business model. If you look at the price of Bitcoin and how much it's fluctuated, those miners are now earning double the income they earned at the bottom of the bear market when Bitcoin was down at $16,000. So that's a massive thing there. To lose half of your income for an indefinite amount of time. It was a really difficult time in the bear market for these miners, but now that they have seen that nice move to the upside and we're all predicting more positive prices, we have this Bitcoin halving just around the corner, maybe some of these mining companies are going to lay off selling for a while. Now, we do know that although they do sell some Bitcoin in order to cover their expenses, a lot of mining companies do have a massive stash of Bitcoin on the side there as well. So we can see here that as the price increases, they'll probably want to hold on to their Bitcoin for a little bit longer to increase those profits. So let's take a look at this. Bitcoin could reach 120,000 by 2024. Those of you that are on the channel pretty frequently know that I am pretty bullish on Bitcoin right now. Looking at this in terms of 2024, I mean, we have the Bitcoin halving in April 2024. Typically, we don't see a new all-time high until a few months after that Bitcoin halving. So I'm expecting us to hit $70,000 around July next year. I'm expecting some nice price fluctuations before then. But looking at this at the end of 2024, $120,000 isn't too unreasonable. We all know that when a Bitcoin bull market does really kick off, and we have seen that FOMO in the past, historically, those bull markets have been pretty extreme and we've seen massive price increases. So I wouldn't say this is too out of the reach. The bank did initially place the forecast at $100,000 in April, but they have increased this now to $120,000 by the end of 2024. Now, they are saying that Bitcoin could rally to $50,000 this year. Similar to what I've just said, I'm expecting $70,000 in around July next year, expecting to be below $70,000 until then, and I'm expecting to be hitting around $50,000 in April next year when that Bitcoin halving does really hit. And we're expecting a lot of volatility then, and I'm expecting a lot more people to enter the space. We see this over again in cryptocurrency. In the bear market, people aren't interested. I mean, there's people, everyone that's interested now, I think, are in a really good position. And then what will happen is around the end of next year, July next year, when we start to see new all-time highs, they'll all call us lucky for being around during these difficult times of crypto. Being in crypto in November, December last year was not a fun place to be. Everybody was depressed. Nobody wanted to be in the markets anymore. Everyone on cryptocurrency Twitter was horrible. That wasn't easy and that wasn't luck. That was an informed decision from all of the research we have done. And even in times like now, everything's quite uncertain right now. We're seeing BlackRock come in and a lot of people are feeling a lot more positive, but it's not really, people aren't really. This is now the time to start doing your research if you haven't already and buckle down on the space. People that are in the space now typically probably have already been in the space before and know what's going on in the industry and know that this is a good time to get into the markets. But if you have not, make sure to do your research on the industry now. I personally would say this is a brilliant time to get involved, and we are running out of time on that. So make sure, if you haven't already, also just go to cryptosavingexpert.com. We do have cryptocurrency news, guides, courses, market data, and an encyclopedia there as well. So it's your one-stop shop for crypto. You can learn everything about crypto completely for free. We are not selling courses. They are all for free. So make sure to check them out. Aimed at you beginners out there to become an expert into cryptocurrency. And we have some more coming out very soon that will be more technical and more up my street. So we'll make sure to stay tuned on that. We've just hit 11,000 subscribers on the channel there, on the website there. And that has grown so fast within the last couple of weeks. I mean, the growth of the website, it's been like pretty steady since we launched this year. And then the last couple of weeks, it's just started to, the bull market has arrived for cryptosavingexpert.com. Let's just say that. So don't make sure not to miss out on that and go and check it out if you haven't already. We've just hit, I think, 18,000 subscribers on the newsletter. The growth in the last couple of weeks has been absolutely crazy. Hopefully, we'll be higher than the price of Bitcoin soon. Let's take a look at this anyway. So Bitcoin is on a progressive streak. The bank's latest Bitcoin price forecast echoes the co-founder and CEO of blockchain analytics company Masari, who predicted in March that Bitcoin would reach $100,000 in 12 months. I don't think that's unreasonable. It's higher than I would expect at this point in time. Yeah, it is higher than I would expect. If we're seeing the Bitcoin halving in April 2024, reaching $100,000 before that would break the 4-year cycle. But I mean, never say never. I personally like to follow the trends. I like to look at the 4-year cycles, and I expect that they will repeat but other people think differently. It may not be the case. This time may be different. I just go based on what my opinion is and what my expertise is, and I always think that every single time I've tried to trade against the trend, it's not worked in my favor. But we all have different opinions there, and at least we're all bullish. That's the positive thing here. Let's move on to the next piece of cryptocurrency news and see what else is going on here today. Please don't forget to like, subscribe, and hit the bell notification button, and drop some questions in the chat as well. I like talking to the chat. It's fun to have you guys here with me. I feel like I'm talking to you, even though I'm just firing all the words at you. Let's drop some questions in the chat, and we'll take a look at that at the end of today's stream, see what you guys are saying. Randy says, I'm not going to be using threads. No, I know. A lot of people have used them. I think personally it's going to be one of those things where I use it for a couple of days and then I'll probably just leave it. And I mean, Twitter's still the platform that I'm using for the majority of stuff right now. It's not quite got my attention in the same way, but also it's a new social media platform. I mean, if you don't give it time, the algorithm isn't going to work out what you like and what you don't like. So, I mean, the first few days of an application aren't always fun. It's like TikTok. TikTok won't show you what you want to see for the first week. And then after that, it will suddenly realize what you want to watch and show you everything you want to watch to keep you staring at that phone and scrolling and scrolling and scrolling for hours. Threads is probably going to do the same. Its algorithm just needs a little bit of time. So maybe it will attract users and keep its users, but I'm still thinking Twitter's the best option for me. Let's continue with the cryptocurrency news though and see what else is going on here. So hacker demands $100,000 in Monero for data stolen from Razer. Now I did speak about this in a live stream yesterday. Last night at 10 p.m. BST time I went on Around the Blockchain, which is a YouTube live stream, and I was talking about this and they asked some pretty interesting questions, so I thought I'd answer those questions for you guys today. Number one was, so basically, Hacker is a platform that is a website that sells equipment for your computer. They sell keyboards, they sell mice, they sell all of this kind of stuff. And they've had a data breach, and 404,000 email addresses of Razer Gold users has been exploited. The hacker has managed to get advantage of all of this information, encryption keys, database, backend access, logins, and they want to sell that information for $100,000 in Monero. Obviously, Monero is a privacy coin. The transactions aren't transparent. So when you have a transaction on Bitcoin and you look at a Bitcoin Explorer or Ethereum or any of the major networks, you can see this has come from wallet A, it's gone to wallet B, this is the transaction hash. With Monero and other privacy coins, you don't have that transparency. You just see it entering a wallet. You can't really see where it comes from, or it's very difficult to work out where that transaction has come from. So it adds a layer of privacy. And that is why this hacker has chosen to sell this information for Monero, because essentially once they receive that, they can just sell that Monero and walk away. So there's no real attachment to that, but the problem then arrives with everyone's opinions around Monero. Do you think privacy coins are a net positive or net negative to the space? Let me know what you think in the chat here. Now, I would say, obviously, privacy coins are something that we all can get on board of. We all understand why people want privacy, but they do have some negatives on the space. I think a lot of people that aren't in crypto think that every cryptocurrency and that Bitcoin is a privacy coin. They don't really understand that Bitcoin has that transparency on the network. So a lot of people look at cryptocurrency and say, look, this is all private transactions. You can use this to launder money very, very easily. In fact, we saw the BlackRock CEO say in 2017 that Bitcoin was an index for money laundering. And this is what a lot of people that aren't in crypto think. People think that crypto is used for illegal transactions with malicious intent. And I think privacy coins are some of the part of the reason why cryptocurrency has that bad name. But I don't think this is something that we need to look at as this is the only option. I mean, if you look at the statistics, the amount that cryptocurrency is used for bad in terms of the amount of cryptocurrency transactions that are malicious are very, very small compared to the rest of the industry. And I think that is something that people are starting to realize over time. But what we have here obviously is people in the traditional markets, not in cryptocurrency, saying that Razor is being hacked, saying that they're asking for cryptocurrency, and it's just once again giving crypto a bad name. So that's not really what we want to see as a whole, but it's something that's happening over and over again. This tends to happen, and it seems to be privacy coins are in the limelight for that. Overall, though, my opinions on privacy coins are they are very good. I think with CBDCs being introduced around the world, many people will turn to privacy coins as an alternative for that. The problem that we do see with privacy coins is the regulation. Obviously, as you can imagine, regulators do not like privacy coins. You can see here, can be used to launder money very easily. And with that privacy on transactions, you can't track the funds in any way. So with this, it does create concerns around regulation, which creates concerns around the accessibility. If the regulators are going after privacy coins, centralized exchanges don't want to offer privacy coins, and we get those problems in that sense instead. Let's take a look at this, what's going on here. So Hennon says, what is the guarantee that this hacker wouldn't still go ahead and use this information after being paid? Well, that's the other thing. I mean, they've said that they will sell this information once for $100,000 to a serious buyer. But I mean, nothing's certain in this world. You'll never know what can happen with this data. They could just sell it over and over again if they wanted to. We'll see how this plays out. It will be an interesting one. And who's to say he's even got that information in the first place? We need some solid proof here. Let's continue with today's news and see what else is going on in the markets. Don't forget to like, subscribe, hit that bell notification button. Make sure to tune in every single weekday to these live streams. And make sure, if you haven't already, contribute to the chat. Any little helps. Send me some questions in for the end of today's stream, and we'll talk about that. We have some more cryptocurrency news to discuss today, and then we will be analysing the price of Bitcoin, taking a look at the price chart there and seeing what's really going on today. So make sure to stay tuned until the very end. Let's see how many likes we've got on today's stream. Let me pull this up. We are currently on 19 likes for today's stream. Let's try and get to 35 by the end of today's stream. Is that a bit ambitious? I don't think so. We've got a lot of time left. Let's see what else is going on here in today. So we have study finds 60% of all crypto workers are employed by exchanges. Most crypto workers reside in the US despite the regulatory pressure. So 60% of all crypto workers are employed by exchanges and brokerage companies, according to this study. And crypto jobs fell by 10% amid market meltdown. Now, this is something which is really, really interesting because the volatility in the cryptocurrency markets, we see so much volatility in the employment of cryptocurrency businesses. During the bear markets, we really want to thin down the amount of employees, essentially, get the costs down as low as possible and just make it through that volatile time, make it through that turbulent time. And then when the markets start to pick up again, the amount of demand on these cryptocurrency companies increases massively. And with the amount of demand, they need to hire more staff. So the volatility of the cryptocurrency markets really makes the cryptocurrency employment rates fluctuate massively. And we see that over and over again. And it's something that these companies can't really avoid. I mean, when you're looking at the amount of demand that they have in the bull market, they need more staff for that. But also during the bear market, when all the cryptocurrencies are low, and their income is much more reduced, so they then need to cut costs. It's something that's really unavoidable in my eyes here, and we can see this probably continue until the volatility starts to calm down. And I do believe, I am of the perspective that although cryptocurrency is volatile, it's not going to be volatile forever. We see these 4-year cycles. We're not going to see them forever. I'm not going to be sitting at 60 in my armchair looking and going, it's time to buy Bitcoin. The bear market's ended. I think we will see bull markets and bear markets, but not in the extreme fluctuations that we've seen today. And this is why I keep saying this opportunity isn't going to last forever. It's not that we're going to see like 200, 300%. I mean, we've pulled up the chart here before. Let me see if I've got this chart saved on my computer here. If I go to load layout, let's see if it's here. Let's see if we've got it on today's chart. You can see the Bitcoin halvings massively cause price fluctuations. I've not got the right chart here, but what you can see is every single Bitcoin halving, we see a nice move to the upside. We see massive percentage gains for Bitcoin in the bull market, and I expect that to massively reduce. I don't expect the volatility in Bitcoin to continue at this pace. Every single bull market, we've seen the price decline because the market cap has increased, and I expect that to continue. We will see volatility years and years and years down the line, but not to the extent that we are seeing right now, I don't think. think. Let's get back to the point here. When that happens, when that volatility starts to shrink a bit, the highs start to calm down a little bit, the lows start to calm down a little bit, and Bitcoin starts to fall at its actual fair market value, which I think is much higher than it currently is, then we will probably see the fluctuations in employment start to calm down in the cryptocurrency sector as well. But until then, it's very uncertain and it's very volatile. But it's a really nice industry to be in. And I would say if you can find yourself a job in cryptocurrency that is secure even throughout the bear markets, it's such a nice position to be in. I've been through a bear market before as a solo investor and trader, and it was a horrendous place to be. But having this time been through it with Crypto Saving Expert and being a part of a team, it's such a better experience. I couldn't recommend it enough. Let's continue and see what else is going on in the cryptocurrency news. If you are in the same position, you don't want to get a job in cryptocurrency though, just getting involved in communities is such a good place to be in. I mean, during a cryptocurrency low, if the price of Bitcoin dips and you are a solo person trying to navigate the space, it's so much more frightening than just being a part of community, talking these things through, seeing opposing ideas, and just looking from a bigger perspective, because it's so easy as a solo person, not in a community, to get so wrapped up in your own trades, get really emotional in your trades and make the wrong decisions. So even if you can't get a job in Web3, just look at getting involved in different communities. It would really, really help. And also make sure to give us a like, subscribe and follow on the Crypto Saving Experts YouTube, on our TikTok, which I am now posting on every single day, on our Instagram. I'm posting reels there as well, and we also post the daily news constantly, and on our, what have I said, Twitter, TikTok, YouTube, Instagram, and Threads as well now as well. If you would like to check out Threads, then make sure to give us a follow on there. Let's take a look at what else is going on here. We need to talk about Huobi. Now, this is one of the major cryptocurrency exchanges, and a Bitcoin OG, Willy Woo, has now compared the state of the Huobi crypto exchange to a slow-moving train wreck due to an increased outflow of Bitcoin, ETH, and USDT over the years. So let's take a look at the chart here. You can see the price of Bitcoin has fluctuated massively since 2018. This is the black line here. The chart starts at just at the end of 2017 there, and you can see this orange line here is the total balance of Bitcoin on the Huobi exchange. So during the low of 2020, when we saw that big dip due to the COVID-19 pandemic, we did see an all-time high for Bitcoin on the Huobi exchange. But since then, it's just been a downwards movement there. I mean, a lot of cryptocurrency exchanges did see a huge amount of Bitcoin outflows following the FTX collapse. But since then, things have been outflows have been pretty heavy for all of these cryptocurrency exchanges. But when you zoom out here, it wasn't really the FTX collapse that started these outflows. Huobi outflows have been high since back in start of 2020. So if we take a look at what's been happening here, we've also seen the Huobi web traffic has taken a hit. Huobi have responded to Willy Woo saying addresses being used are incorrect in this data and this dashboard isn't correct there from Glassnode. But we also have seen that the exchange has had a rough few months. So to take note that Justin Sun, through the Hong Kong-based company About Capital, successfully acquired a controlling stake in Huobi from its founder in October last year. Soon after, in November, the cryptoverse was struck by the massive implosion of FTX. We did see them lay off 20% of their staff. Other crypto firms have carried out layoffs due to the crypto winter. But in March, the US SEC filed fraud and securities charges against Justin Sun, the new investor and controlling stake in Huobi. And a month later, it was rumoured that Justin Sun had approached Bitcoin to buy Huobi, but the Tron founder dismissed the news as an April Fool's joke. So the decline in dominance and crypto balances at Huobi could just be a consequence of a rough few months for the exchange as a result of the crypto winter, or it could be that Huobi is really in trouble and Willy Woo is right, and that it is a slow-moving train wreck. We do all have to see here, and with caution, with the knowledge of this happening, with this warning being sent from Willy Woo, I'm expecting a few more outflows from this. I mean, any negative press, especially now, if you heard negative news about a centralized exchange in June, we probably would have seen some outflows, but we wouldn't see the amount of outflows that we'd seen today. A lot of people that are in the cryptocurrency markets today were in the markets in November 2022, last year. And when we've seen what happened to those people that were holding FTX on and holding their cryptocurrency on the FTX exchange, we've all had a front row seat in what actually happens here. So when we see FUD around centralized exchanges now, there's a bigger reaction to that. Which is definitely a positive thing. I mean, FTX was a really horrible thing. A lot of people have been affected, and I feel awful for those people. But this has been a real wake-up call for many people within the cryptocurrency space to store their cryptocurrencies offline on a self-custody wallet, not on a centralized exchange. And overall, I think the cryptocurrency space has become better as a result of that in the long term. Not in terms of individual cases, but in terms of the space of a whole. A lot of people have learned from this and built from this and understand the cryptocurrency industry a lot more. It's pushed a lot of people to do a lot more research into how to store their cryptocurrency correctly, and that's a really positive thing for the space there. Let's continue with the next piece of news and see what else is going on. But please don't forget, if you have not already, to like, to subscribe, to hit that bell notification button, to make sure to follow us on TikTok, Twitter, Instagram, YouTube, and Threads, and any other platform that we are on at Crypto Saving Experts. We will put the links in today's comments section if you have not already. And make sure to subscribe here on YouTube. If you are following us along on Twitter, make sure to come over to YouTube. We're better over here, and hit that like button there. Let's see what else is going on. So moving on to the next one, Standard Chartered sees Bitcoin at $120,000. We've already spoke about that. Rewind if you've not seen the full stream. What else? We've got 93% of banks interviewed by the BIS are engaged in CBDC work. So the Bank of International Settlements has just published a report discussing the findings of a survey of 83 central banks in the latter half of 2022. Now, 93% of banks are looking at the CBDC according to this report. So they're looking at the possibility of issuing one. Now, there's a lot of contradicting opinions around CBDCs. Are they a good thing? Are they a bad thing? I personally think that they are the natural progression to what we are seeing right now. I mean, cash isn't going to be around forever. We've seen this coming for the last couple of years, and we are now seeing central bank digital currency pilots all around the world. Loads of different central banks are looking at these schemes and trying to have a proper research about them and see how we can move forward with the technology. If we use central bank digital currencies on blockchains, it would be a perfect way for the government to teach people how Bitcoin works. We can also see negatives around CBDCs, though. A lot of people are worried about the limitations that could be inflicted on their money and how they can spend their money. But we will keep up to date on that and see how this plays out all around the world. So make sure to stay tuned here on the channel. Let's take a look at the last article here, and then we'll take a look at the price of Bitcoin. So find Satoshi Lab to reward creators GMT tokens to promote their new game Gas Hero. So find Satoshi Lab, the team behind STEPN, a fitness app built on blockchain technology, has announced a promotion for their highly anticipated video game Gas Hero. Now, STEPN was a massive application that really was in the big wave of move to earn last year, or was it the year before? STEPN was an application that you could download on your phone, and when you bought NFTs, which were like running shoes, and you did a certain amount of steps, you earned tokens. It was a move to earn platform, similar to move to earn and play to earn. That's what I'm looking for. Similar concepts there. If you were fit and you moved and you ran, you earned more tokens. So a lot of people got involved in that. A lot of people not in the cryptocurrency space as well got involved in that. I would say that project was definitely a project that brought new people into the space, and that team, the team behind STEPN, Find Satoshi Lab, have now moved on to create Gas Hero, a very highly anticipated video game, and they're looking to try and do the same sort of thing here. We saw with STEPN, they were trying to get a lot of people into the game, into the space, by offering tokens as a reward for doing things. I mean, move to earn projects definitely have that incentive even for small players within the game, and they've tried to go for that same sort of model with this new game. So we've seen here they are offering 2 million GMT tokens, equivalent to approximately $420,000, as part of a promotional competition. So the competition, set to span 3 months, aims to celebrate creativity and talent by rewarding participants with GMT tokens tokens for their avatar creation and design skills. So if you are interested in that and you want to get involved and get a handful of that promotional tokens, make sure to check out this article for more detail. I'll put the link to it in the chat and you can see how you could be up with the chance of getting some of that GMT. Interesting article there, so I'll send the link in there. If you are following along on Twitter, make sure to come over to YouTube. Let's see what's going on with the price of Bitcoin now. I've already deleted the chart today. I didn't mean to do that before. Let's pull this up and see what we've got here. So first of all, this isn't the chart I was looking for, but we can pull this up. We can talk about this very, very quickly here. So you can see that this is the Bitcoin halvings for the last couple of years, well, the last decade. And you can see we have a Bitcoin halving predicted to be in April 2024. Therefore, we are highly anticipated bull market should be on the way. But let's take a look at what's going on in the short term now. Let's go over to Bitcoin USDT. Let's zoom right in here and see what's going on. So if we zoom in here, you can see that we have had a level of support forming at this $29,850 level, and we have a level of resistance here. Let's pull this along at around $31,250. It's not broken yet. It looks like Bitcoin has gained some bullish momentum and wants to try and break through it, so I'm keeping a close eye on this. I'm personally trading this range. We've been in this range for 3 weeks now, bouncing between this $2,000 range and taking advantage of that by buying the bottom, selling the top, and repeating over and over again until we see a breakout. When we break out, I'll probably enter a breakout trade. But right now, we're just seeing us enclosed within this range. If we take a look at the MACD and the RSI to get some indication as to what way we're moving in here, you can see we have some bullish momentum there indicated by the MACD, and you can see the RSI is pretty neutral. I mean, I don't think it could get any more neutral at this point. Waiting to see what we have from that breakout. Another thing I would like to point out, which I've not pointed out in a while, is if we take a look at the monthly chart here, you can see on the monthly chart every single time you can't see on this chart because I've not pulled up the right one. If we go to the Bitcoin USD chart that backtracks here, every single time the MACD has ticked green in history, it's been at a point in which the bottom is in for the bear market and the bull market is beginning. When you look at the MACD, what is happening right now on the monthly chart, this is what I'm talking about. We are currently growing a green candle. Now, obviously, the month has not yet closed, so we have not yet seen a green candle. But if this closes green on the monthly chart here, which there's a high probability it will do, it is the indicator that we've seen historically to say that the bear market bottom is in and the bull market is beginning. So that would be definitely a positive thing there. And the reason I say it's likely to close green is because if we look at the history of Bitcoin, July is typically a very bullish month. So I'm feeling really, really positive about what's to come within the next 2-3 weeks here. Make sure to stay tuned here on the channel to see what's going on. We also need to take a look at this RSI. You can see it's pretty neutral here on the monthly chart as well, not particularly oversold, waiting to see some buyers enter the market. So I'm keeping a very close eye on that. But overall, things really are not looking too bad for Bitcoin right now. I know a lot of people are very cautious because we've seen this strong move to the upside. But over the last 3 weeks, we've definitely been holding that level of support really, really nicely at the $29,850 level. So until we see a breakdown through that support, I'm continuing to feel bullish on this. But we will keep you updated here on the channel of what's going on. We do the analysis every single day. We do Bitcoin, cryptocurrency news, Bitcoin analysis, and sometimes we throw in some Ethereum analysis as well. So if you are new here, please don't forget to like, subscribe, and hit that bell notification button. Let's see what's going on here. Helen says play-to-earn markets are still struggling and hasn't really lived up to the hype it came with. It's just the use case for NFTs. Very soon AI tokens will join. Yes, definitely something I agree with. Move to earn tokens have struggled within the bear market. When your tokens aren't worth as much as they used to be, people don't think it's worth it anymore. But if you are accumulating throughout these times, you never know. I actually have a friend who had a token. It had an application for the past 10 years and it's just been racking up points on this application. It wasn't a cryptocurrency application. Every single time they hit 10,000 steps, they got more points and more points for the last 10 years. And that application has just decided to step into Web3 and turn those points into cryptocurrency. Probably one of the biggest holders in terms of actually earning the points rather than just buying those tokens at this point in time, because they've been racking up points for years. But it's an interesting concept, and rewarding people for fitness is definitely something that's good. Even if those tokens aren't worth very much right now, it's definitely incentive for people, and that's important. So Jerome says, do you think this will be the last big bull market? Interesting topic there. Let's pull this up once again and let's talk about this. So as we can see here, every single time we have a Bitcoin halving, we have a nice bull market and we see the price of Bitcoin increase. If I take a look at what's happened here, I've got my laptop here and I think I have the chart up which has the percentage changes. Let's see if I've closed this down or not. So what we can see is every single time we see a Bitcoin halving, we see the increase for Bitcoin decline a little bit more. In terms of the increase in the bull market is big, but every single bull market, the percentage change has declined slightly. So as I was just saying, I'm expecting the volatility in Bitcoin per bull market to reduce. We have a fair market value for Bitcoin. We have not yet achieved that fair market value, but when we do, the markets won't be as volatile. I personally think right now, $30,000 Bitcoin is massively undervalued. If you look at the market cap for gold and you look at the market cap for Bitcoin, you can see there's a massive difference there. And Bitcoin, I think, is even better than gold. Bitcoin has you can send Bitcoin across the world in seconds. Gold, it's not that easy. Peer-to-peer payment system, all across the world. I think Bitcoin is 10 times better than gold. I think gold is a really good asset. It's a really good way to hold a store of value. I think Bitcoin is even better than that. So I don't think Bitcoin has yet reached its fair market value. And when it does, I do expect that volatility to increase. We can't continue to see, let's see the percentage gain here. From the bottom there to the top here, we saw 51,728% increase. This time we saw an increase of 12,525% increase. Then the last bull market, we saw an increase of 1,927%. You can see there the percentage gains are declining, and I expect that to continue. I mean, when the market cap of something is $10,000, it's much easier to see a 1,000% gain than if it's $100. And we'll see that over and over again. As the market cap increases, the percentage gains will decline. But overall, we've still got a long way to go to get to that fair market value, in my opinion. I'm expecting some big gains. Everybody thinks they're late to Bitcoin because they didn't get in at $10, $100, $1,000. I still think we've got a lot of room to go until that fair market value. So although I do think the volatility will increase and we won't see these massive bull markets that can have generational wealth built by somebody buying into altcoins, I do think we've got a few more runs to go. We've got a few more nice bull markets to go. And even after that, there's still gains to be made. People make gains in the stock market that move like 0.5% per year. So I don't think we need to worry about that too much. But in terms of seeing seeing it as the most volatile markets and asset class, I think we'll start to see some declines in the volatility as time goes on. And that is why I want to take advantage of it as much as possible right now. And that is why I'm spending so much of my time educating myself in the cryptocurrency space right now, because it's not going to last forever. We're not going to see this tremendous gain every single 4 years for the next 50 years. That volatility will decline. Otherwise, people won't see it as a safe way to store their value. If we continue to see these cycles forever, people want to store their value. People want to look at Bitcoin and gold as a way to store their value, and these 4-year cycles are they're just here while we really see Bitcoin get that fair market value. When it starts to get there, we will see volatility, of course, but not to the extent that we see right now. That's a positive thing. That would be Bitcoin being used in the way that it should. So Hennett says, what if the bull market ends up not coming at all? I mean, it's not written in stone. And that's something I should point out. It's not written in stone. But when we look at the Bitcoin halvings and the effect it has on the network, we've seen in history that it does happen. Obviously, nothing is certain in this world. But when we're looking at this, I think there's a high probability that this is going to happen. We've already seen FOMO enter the markets. What we're going to see is the Bitcoin reward for Bitcoin miners half. And therefore, we are going to see an increase in the hashing power. And we are going to see some more competition in terms of the Bitcoin network. We are then going to see FOMO enter the markets. We see it every single time. One thing that we could see right now, funny you say this, Hannah, it's probably, I know you are very much bullish on the markets, but at this point in time, we usually see a lot of denial that the bull market is going to come back. So we probably will see that within the next couple of months. But overall, when the Bitcoin halving arrives in April, I'm going to feel really positive. Randy says, thanks, Jess. Don't forget to take a breath. Good job. See you tomorrow. I know I really need to slow down my talking. Thank you very much for tuning in once again. I'm trying to talk slower. I'm trying to take more breaths. But when you're the only person on the show, I feel like if I stop for a second, you'll all get bored. So I just throw all the words at you and hope you understand them. But that's all we have for today. Thank you very much for watching. As always, I need to go and get on with some more stuff. I'm going to go off right now and make a TikTok, so make sure to go over to TikTok and give us a follow so you don't miss it. I've got a good one today. I've planned this one, so make sure to like, subscribe, hit the bell notification button, go and spam our TikTok with likes, go and spam our Instagram with likes, go over to our Twitter, put on your post notifications. That's all for today. Thank you very much for watching, and I will see you all back here tomorrow. Goodbye. It's been a long stream, 52